Good morning. Today is Thursday, July 7th, 2016. SPY before the open plus 10 cents, 1.4 million in volume. This is how it ended yesterday with the establishment of a negative divergence on the hourly with a 15. At the end of its upcycle, it seems we have a 5-minute negative divergence over here, undermining the 15-minute chart. We've been patiently waiting for the formation of this divergence on the hourly to undermine the daily. As we know, the price should continue its downtrend. This was nothing more than a heavy manipulated pullback on an established downtrend here on the monthly. Now, yesterday, I decided to enter a position on VXX. I've been following very closely what's going on here, and I decided to pull the trigger on VXX right around here, around 218, I think it was. And I entered a position to the upside on options that expire not tomorrow, but the following Friday, third week expiration. I bought the 15 calls based on this particular setup, basically. Not only the 60-minute divergence, but the 2-day chart, which interestingly enough, right now, looks flooded more down. Yesterday it was more sideways. And I have the certainty that I made a mistake on my entry. I should have waited for the erosion of this 4-hour chart. And then it really looked as if the 2-hour chart was in the beginning stages of the end of its pullback and in the middle of a continuation. If you take a look at my entry, I entered here on a negative 1-minute divergence. And was very obvious end of upcycle of the 5. If anything, let this thing down cycle and then reanalyze the picture after that. And my analysis of this particular picture right now is not ready yet. So I made a mistake and I bought 20 contracts. Here's the entry at 26 cents. The price of these options is now down to 16, so that's 20 contracts times 20 gives you 200. So here's a quick look at the time lapse, if you will, of the entry at 217. That's what my account looked like. This is the security, July 16, 15 calls, VXX at 218. This is the preview of the order. 25, 26 bid and ask. The order was placed at 218. Here's the entry. So we invested $520 plus $23.95 in commissions. Right on the entry, down $60 because there's a difference of 3 cents here. And yeah, I should have waited. My problem here was that last time this setup happened on VXX, I missed out on the opportunity and it made thousands of % return. And so my fear of missing out is huge. And you gotta give it to me. This looks pretty good, but this doesn't. And so my emotions took over my logical thinking. And I entered a position at the wrong time. So that's what's going on. Minus 100 here at some point. Take a look at my entry. Take a look at this 5-minute now, down cycle. Take a look at the 1 minute. Then the 15. I made a mistake. There is no two ways about it. Minus 160. Take a look at the decay on this thing. See, I'm betting on upside, not downside. This thing is trending down. So there you have it, minus 200. Here's the aftermarket of VXX. Minus 220 at some point. These are the 15 minutes of the ETFs. So the good news is that right now on pre-market, we're not crazy to the upside, just 23 cents on SPY, which means more downside on VXX, but not too crazy. So here's the opening. Let's see what happens. So there's the opening. Here's a look at the pre-market and the open. It's just 23 cents. That's at 35. Let's see our position, minus 260. So this is what this thing looks like. Take a look. That's pretty nasty. I am an absolute retard. I should have allowed this thing to sell. Take a look at that daily. Even the 2-day thing here changed. And then there's a helicopter flying on top of the house right now for the last 15 minutes. That's literally driving me insane. $9.36, the upside continues. Minus 280. Here's a look at the 60-minute time lapse. This is closing yesterday, opening today. Take a look at that daily. The market continuing. The heavily manipulated upside. Unbelievable. There's VXX. There's a definite pattern here. And an upside pressure pattern here. Not that that can do much of anything. So, there you have it. 1054, topping out here, here. Can this do it? Take a look at VXX. Finally trying to come out of the shallows. Options are 12 and 13. We're still stuck at minus 280. Value over here at 240. 11. And the price was developing down pretty good. Look at the direction on that 5. And if we go to VXX, very nice upside here. These options, 13 and 14, 260 over here. Take a look at this, resolving to the upside pretty steady right now. Minus 240. We're a little far away from our entry. But this is starting to look pretty interesting, although the direction over here is nasty. But we have a nice pattern that wants to turn. See, this would have made absolutely more sense. I need to really finesse my entries like this. This is a very good experience. 1254. Take a look at this drop on VXX. And take a look at the surge. The drop on SPY, surge on VXX. God damn it. I am negative $140. 120. 210. This thing built up a pattern over here, pulled the price back, and now it's really dropping. That daily has not turned yet. The 2-hour has turned. The 4-hour is flattening. In my position, I'm only minus 60. After being minus 280 today, this thing has not caught up to what's actually happening. And there's the price surging. Daily hasn't turned. How about the 2-day chart? It's flattening. The 2-hour has turned. The 4-hour is flattening. This is pretty good. This has not caught up to it. Minus 60 still. 238. I got a little distracted here on the drop. But if you take a look at VXX, I went above my entry. Now, that doesn't mean that I went positive on the trade because of time premium decay. See, it says that I made it to 25 cents. If I go to bar, I made it all the way there. So I was not quite even because of the commissions in and out. But take a look at this. Ooh, I'm at 20. So there it is, I'm at 20. Hard press not to sell, but in reality, take a look at that 60 grabbing momentum. I am at 0. Little regression there. Still at 0. In the brink of being positive. My mistake was entering at the end of the up cycle of the 5 instead of waiting for the end of the down cycle. I'm an idiot for doing that. Do you know why that happened? Because I'm too pressured, I'm too stressed. And my emotions control my trading sometimes. That is my problem. 332, take a look at the topping and then the drop. It's catastrophic. Minus $1.60. How about that? 352, it's a pretty interesting pullback on SPY and an even more dramatic pullback on DXX. But it's okay. I mean, I hate that I'm in this position. I'm going to do a study and I'm going to show you this potential just by waiting for the end of the down cycle of the 5. That was my mistake. But this very simple dynamic here puts you in the money or out of the money. It's so crucial to understand this and master it. And take a look at the decay on these options here. Take a look at how nasty this thing looks like. Minus 220 again. So here we are. As you see, the market already closed. And if we go to VXX, we had this incredible rally in here. And I will show you how this is the trade that I was shooting for. And my problem, as I stated before, was emotions. Not the quality of my technical analysis is there. My problem right now is emotions. I am emotional because I'm too pressured to make money on this thing now. It's been 4.5 years, and I need to really break through to change my economy from the printing world into the trading world, because my printing business is dead. And so I find myself economically challenged right now. And so the pressure builds up, and pressure and emotions lead into bad decision making. As I stated before, this entry here was wrong because I entered at the end of the up cycle of the 5. I cannot believe that when I was doing my analysis and I decided to pull the trigger, I went in here. What I saw was, okay, the 15 just turned off and that's it. And I have the hourly divergence. But in reality, what we had is the end of the up cycle on the 5. And so this was a pullback on this trend. And so we needed to let this thing come back down cycle, and then get in on the up cycle. Now, think about this for a second. If I had done that, and I had gotten in here, now take a look at how easy it is to put this thing together. See how the pattern pops up? This is a 1-2 pattern, but the 5-minute is still in its down cycle, so this thing pulls along, and you have the continuation, and it retests lower. It introduces weakness onto the 5-minute down cycle, and then you have the pattern perfectly flushed out over here on the 1. I mean, it's iconic. Either here or even here. This was the entry. At this particular point, you can let this thing go, let the 5-minute turn, and either you enter here or you wait. See the 5-minute turn, and then you have a little bit of a pullback. This pullback here really is the moment. The 5-minute is in the beginning stages of its up cycle. The 15-minute is getting ready to turn up, and you have a more mature hourly divergence. This is the moment, either here, where it's very obvious that this thing is going to turn up. If anything, this pullback here or here. Let's say here at 10:41 a.m. you're retesting at 1287, so you can very easily go for the 13 calls at 10:41. So here it is, the 13 call options, VXX, and these are the July 16s, mind you. These are not the ones that expire tomorrow. These could very well have been just an up cycle 5 minute. But even these guys made 95% or 75%. By 104, which is right around here, on this topping, see the 1 minute, let me give this thing more range. The 1 minute gets going here, then it reaches its technical top, creates a divergence, pulls back against the 5. At this point, the 15 has turned, and the 60 is turning. So this thing comes back up over here, it dents the 5. You have a continuation, and by around 1 o'clock here, you create a technical topping on the 1, hardly a pattern, just a downside pressure pattern. And at this point, the 15 is gone, so the 5 minute technically tops, and at that particular point, you are right here at 75. Then this is the pullback of the 5 and continuation, pullback of the 5 and continuation, pattern on the 5, technical topping, and that ends the run of the 15 on this particular movement. That right here around 240 something, 250. See, take your pick, takes you to 95%. I basically did this trade. I just entered wrong. If you mess up your entry on a 5 minute chart, this is what happens. At this point over here, I was at 0 on my trade. I didn't want to get out with a $50 loss, because if you pay attention, it's 23 in and 23, or 24 rather, in and 24 out. So I decided, you know what, I have a week. This thing is going to pull back again. It's going to form a 15-minute divergence, and this thing is going to go back off. I should have really entered this position, but the fact of the matter is that this stupid trade negated me mentally from doing this. That's something I need to work on. Now, let me show you the expiration tomorrow, the July week 2s, because these are July week 3s or monthlies, Friday expiration. Here's the 13 calls, July week 2s. You know what I can say here? Ouch! 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 Same entry, 1041. Here's 1041, but on the July 16th, third week expiration. See the difference over here? These options are 19 cents. And by about the same time, I marked this one at 104, this one at 107. This is 178% return by the time the 5 minute tops out. And then it pulls back, it continues, and over here, 231% by the time we complete the 5 minute divergence that undermines the 15, and then you have the drop. Ugh. Man, I can't, it's hard, it's hard. It really is hard, because I entered the position, I just messed up the 5 minute chart. I entered a position with $520. $520. And we're talking about a 231, let's say 200%. So it's 520 times 200%. So obviously twice, it's 1,040 plus my 520. Oh man, I hate this thing. 520 plus 1040, 1560 plus $725. $725. I have $2,285 right now on this position. Is that not insane? Now, last but not least, I want to just quickly take a peek at the 15 calls, which is what I entered over here. Over here, I'm showing you the 13s. Let's see the 15s. We're looking for something close to 10 cents. If the 15s are too cheap, then I would probably skip them. There they are. Don't like them. Too flat, too far away. So we discard them. So we were on the 13s. How about exploring the 14s? We're looking at 1041. They're 3 cents. They moved from 3 to 17. The problem with this is that it looks like a lot. But the problem here is that the commissions and the spreads kill you, and then you have to buy too many contracts. So I don't like that. 13 and a halves. Now we're talking. 1041 was the entry. Right around here. This is the topping of the 5. This is the divergence of the 5, the topping of the 15. This is the topping of the 5. So from 8 to 32. From 8 32, 300%. It's not, you know, I like this a lot. Because over here I have more room to maneuver. I don't have to buy a crazy amount of contracts. So I pay less commissions, blah, blah, blah. But you can see the range there. Now, let's go to SPY. On SPY, we form the negative divergence on the hourly. We introduce weakness to the 15, just in the same fashion that over here, you have an outside pressure pattern on the 15 that is within the context of this hourly divergence, right? So in this particular situation is the same thing. Over here, what you're banking on is the down cycle of the 5. And for this exercise, we can use our 5-minute time lapse. So around 9:55, even before 9:45, the 1 minute is stopped. So that is the ceiling. The 5 is still pretty poised. So is the 15. The hourly has context, in other words, it has a negative divergence, but we still have momentum. So the 1 minute comes in and establishes a ceiling, a technical top. Starts technically eroding away at the always take a look at how that 5 still moves higher. Then we come to the 10 o'clock. The hourly still moves up, 15 moves up, the 5 starts curving. The 1 minute is pulling back. Here's the larger context, 10 o'clock. The daily is poised, the weekly is pointing up. But the weekly has definitely been compromised, it's now broken. It is ready for a drop as soon as that daily turns. So, the 1 minute pulls long, it's making room for a divergence. Got distracted with that, with an email. There. And the 5 minute turns right here, but the 1 minute is long. So if you haven't entered over here, you gotta wait. Let this thing come back up, because if it's long, that means it's a pullback. It pulled back to 5. The price should come back up. 10:30, price is coming up. We haven't established divergence on the 1. 10:35. This is looking more like it. This is a 5 minute, almost negative divergence. Let me pause that thought right there. And I'm curious to see what Q's doing at this particular moment. We haven't established divergence. Russell, we have a downside pressure pattern. We have a poor man's negative hourly divergence. Diamonds, very similar to SPY. So with that said, I think 10:35 is good. 10:40. The 5 minute is definitely entering its down cycle here. And if anything, I know since the 15 hasn't turned, that there might be a little bit of a pullback. So let's see what kind of an entry. It is 210.47 the price. The 210 puts, you can go and take a look at them. And we're talking about the down cycle of the 5. And if this thing is to collapse, then it will collapse right here. And if not, then you get out. So the 210 puts, July week 2s. Let's take a look at those. Here it is. 210 puts, SPY, July week 2s. At 10:40, they were 50 cents. Now, I moved from 10:35 to 10:40 because it is important to remember that as you are positioning yourself for an entry, see over here, the 1 minute is turning right there. I want to have it turn and pull back. There's pullback. And that pullback here, this tiny little thing here, that's 10:40. And if you go over here, this is the turn at 10:35. This is the pullback. That's 1040. This establishes the trend. This is important. I've been talking about this. This is the 1-2 pattern. One possibility is the trend starts here, and you have a pullback on trend, which is a poor man's divergence. In this particular case, we already had that happen on the 5. See, the 5 turns here, and then it pulls back here, poor man's divergence. It didn't quite retest all the way. And we are banking here on the down cycle of the 5-minute getting ready to start, being put into motion by a negative pattern on the 5 within good context. The context here is that the 15-minute upcycle has been weakened, undermined. It's at the end of its upcycle run, and then this is within context, and the context here is a negative hourly divergence. So you have to put all of those pieces together. I did so with VXX, but I failed to execute a clean entry because, and I'm going to recap here, taking this opportunity yet again, I entered my position here at the end of the upcycle. The right thing to do was get the emotion out of the way, let this thing down cycle, and enter in the exhaustion and end of the down cycle. Over here, the end of the down cycle because we're trading upside. On SPY is the end of the upcycle because we're trading downside. So wait for the end of the upcycle on the 5. Here's your pullback. Thank you very much. Your trade starts. Again, 210 puts, July week 2's SPY. Boom. Now you stay on this thing on the trend of the 5, the down cycle. Take a look. It's beautiful. Here's the context at 11 o'clock. Take a look at how at 11, the continuity of the hourly is compromised. It flattens. The 15 actually turns here at 10:45. The 15 flattens on this 5-minute downside pressure pattern that is almost a divergence. We could call this also a poor man's divergence. So there it is, 1050. There's a little bit of a pullback there on the 1. And here we go, the 15-minute, here's the context. The 15-minute is now totally pointing down. The 5-minute is going pretty good. Here's the first pullback on trend on the 1 because the 1's down cycle is now compromised. There's pullbacks and continuations along the way that create resistance. So it pulls back on the channel right here. And this pattern on the 1 creates a little bit of a dent on the down cycle of the 5. It pulls back a little bit. Then see how the 5 suffered a monkey wrench over here. In other words, we introduced weakness to it. Now we have a pattern on the 1 minute at around noonish, which is right here, noon, right here. I'm not even giving you percentages over here, but 106 from 50, that's 100%, isn't it? 100% right here. This is nowhere near ready. So the 1 minute pulls back. Here's another interval, the top of the hour context. So this thing pulls back the 5. Then you have a continuation. Take a look at the buildup of support there on the 1 with upside divergences. But take a look at the direction of the 15. So this thing pulls back, continues. Now here at 1, we have an established upside pressure pattern on the 5 with a pattern on the 1. This is the technical bottoming of the 15 needed to undermine the 15. This is a 1-2 pattern here. But we have a lot of direction here, and let's not forget that the hourly is now completely turned on its own divergence to the downside. So at 1 o'clock, we are at 168% return. This is a good moment to say, I'm good. 168% return. If we had entered our position over here, which was $520, $520 times 168%, that would have made 873, right? 873 plus the 520. Those 520 had become almost $1,400 plus 720 in total or something, right? Now, this thing is not over, right? Because we understand that that 5 minute is just the technical bottoming. So there it is, starts bottoming out. Take a look at how the 1 minute pulls extremely long. So we're going to have a continuation. Here's the context at 201. Continuation, and there is a tiny little bit of that divergence here by 155. Yeah, at this particular point, I'm going to call it. I'm going to call it right here because I have an established 5 minute divergence. It's a little too narrow, and it's a little too wide on the one, so it's a 3 minute pattern. And if I go here and show it to you, what we're talking about is this. Yeah, here it is. It's not. It's it's not that. And then I have a little direction on that 15. I don't know. Obviously, when you see what happened, then you start being more biased towards, yeah, I could stay longer and stuff. But without doing that, we're looking at 155. At 155, you're at a buck 32, still at 168, right? What's interesting is that, okay, so that 5 minute comes in, it plays itself out. But take a look at the 15. I think runs out of steam, and then there's your continuation. When I was on SPY, when I was looking at this thing in real time, and I was looking at my position, I'm like, there's no way this thing is going to continue. Obviously, I was looking at VXX to the upside, which means SPY to the downside. And so there it is at 215. You have now a pattern on the 5, and then here it is. The 1 minute turns, and there's your little bit of a pullback on the trend. The 5 minute hasn't turned, there it turns. And there's your continuation. Right here, that gives me 235. And 235, 250 gives me this thing here, 210. See, it's so important to do this. Like for instance, over here, I want the 5 to turn, it does, but I want the pullback. Where is pullback? There isn't pullback yet on the 5. Right? There isn't. Instead, I have a continuation. Then the 5 minute turns finally, but not, see, that gives me 245, which gives me this thing here. No, actually, this is 3 o'clock. 3 o'clock. So there's the 5 turning, and there's your pullbacks right there. That's, I mean, if you don't see that as the it, that's your problem. But that's it. That pulls the price back and game over. See that zigzagging over here? That zigzagging, I don't know why I'm on the 5 over here. That zigzagging over here is it. And if I go to VXX, I have it. See, take a look at how the 5 minute turns right here, and there's your pullbacks that actually retest high. That's it. That's going to slam this thing, and it's over. The 5 minute enters on a down cycle, and on SPY, it enters on an up cycle. End of story. But that gives us 210% on the 210 puts. Now, these are 50 centers. We could go look. See, remember, today's Thursday, so the time premium is very accelerated. We could go look for something a little further out, like the 211s. We're looking at this moment right around here. What are these? No, not the 211s, I mean the 209s. One of these things are 290 cents, something that's wrong. The 209 puts right here, 1040 or so, 24 cents. These are kind of cool. You know what? Since we're doing this real fast, how about the 208s? We're looking for 10 cents options, so very close to it. 13 cents. These are the winners right here. This is 1034. Let me do the markings. Same thing. Entry at 1040. These guys are 13 cents. This is the technical topping of the 5 at around 1 o'clock. Right? The technical bottoming on the technical top. Because I was still thinking on VXX. That's it. See? That's the technical bottoming. Right here, we have a pattern on the 1. There it is, it gets established. You have that continuation, that prevents a little divergence there on the 5. You have the continuation, and at this point you're looking at the 5 to turn. As a turn, it turns there. But where's the pullback? There is no pullback there yet. So you have a continuation. So, okay, the whole process starts again. The 5 minute turns again. Nope, continues down. turns again, okay, and there's your pullback, and the 5 stays. See what I mean? There it is. This zigzagging gives you the exit, and that takes me right around here. If you go to 3 o'clock, it's the same level, it's 55, because we're retesting right there. 323%. $520 times 320%. And you know what? I should retract a little bit. Okay, let's do that. $520, which is the entry date on VXX yesterday, times let's see, at 295%. Right? So those 520 make me 1534. So 1534 plus 520, 2054 plus 720. Yeah, I would have $2,774 right there. And we understand why this thing stopped right here, and then it pulled back. It's long, so this thing. See the 5 minute, the 15 turn. When it's a pullback, this thing is long. The hourly didn't turn up. It's just acknowledging that, and if anything, it reinforces the pattern because the technicals are down here. We're gonna have a continuation, and that's why I'm still in VXX, even though it looks ugly right now. I know it looks ugly, but that's okay. So that's pretty much it, and it's the same thing on all the others, right? Quick thing, let me bring up the percentages to see who's tanking and who's moving. Let's see real fast. USO dropped 450%. Have I not been saying, have you been following what I've been saying, that USO is going to come back down again? Take a look at this. Take a look at this. Take a look at this. This is the daily. The weekly is turning. The pullback is over. The quarterly is going to go back down again. These guys are going to crash. See what I'm talking about? This here was very interesting. And that happened intraday today. Take a look at the 5. This is yet another one of those things that you can do. Take a look at how the 5 had already turned. The 15 turns. And I'm looking for the little pullback. I guess this is it right here. But holy shit, this thing just, from this point, it just collapses. This is the pullback, if anything. That's it. It just doesn't have it to give. The 15 turns, and this is as much pullback as you're going to get. And then, kaboom, bounce, continuation, and you know the rest. How about that? And then at the same time, when this is happening, take a look at where that daily was. GDX pullback. Remember, if you're following my work, I said there is a pullback on gold coming in, and I said somewhere in this area here, 29 or something. I said, I think. I don't even remember where I said, but I think I said 29. I thought 20. No, I definitely didn't say 27. Maybe 28, 28.50. That's what I said. Because we hit the top of the channel, you get this weakness, and you have this drop. Same thing on silver stocks, right? Silver weakened. You even had a nice hourly over here, right? How about GLD? Same situation. And then let's take a look at Micron. Micron went off. Why? What's going on here? Well, this guy is long. Yeah, we have this panel here. This is something that I wouldn't touch with a 10-foot pole. This thing wants to continue the downside. Take a look at quarterly. This is a pullback on trend. This is long. This divergence over here. This is a pullback on the daily. Really, that's what this is. That's what this is. So that's nothing. Bank of America came up towards the end. Big spike coming up over here. Financials. Very interesting, isn't it? So that's it. You can see the winners and the losers. Let's get back on the horse here. Tomorrow is Friday. We have context. there's going to be a continuation. The down cycle on the 5 is going to be interesting. 5 is long, and the 1 minute is already undermining its ability to continue. Tomorrow could be an interesting day. Let's see what happens. Good insight here. So tomorrow will be Friday, July the 8th. Until then.